Let's talk, buyers, about how to time the real estate market and buy low. So a buyer's market should be just that, a buyer's market. And by its very name, it means buyers should be doing one thing and one thing only, and that is buying. The problem is usually the exact opposite happens. In fact, the biggest irony of a buyer's market is that even though the opportunity to buy is very high, the buyer urgency tends to hit an all-time low. I'm Lisa Salt with Vernon Salt Fowler, and today I want to talk to you about how to time the market in a buyer's market. We've all heard buy low, sell high. That's apparently the secret to great real estate investing. But is it? Let's look at it a little bit more. Back at the height of the market, when there was hardly anything to buy, everything was in short supply, nothing on the market, prices were skyrocketing, everyone in the world all of a sudden seemed to want to buy a house. Now the market has shifted from the peak and there is more inventory on the market right now. Prices have stabilized, maybe gone down a little bit, and the probability of a multiple offer is slim. Yet now, all of a sudden, no one wants to buy anymore. Back in the day at the peak of the market, buyers were afraid. They were so fearful of losing out by not buying. Even though the advantage at that time was all to the seller. There's multiple offers all over the place. Now the stats are telling us we're in a true buyer's market. But then what happens? People are still fearful. Buyers are still fearful. Fear is back in the driver's seat, but it's not the fear of missing out of buying anymore. It's the fear of paying too much. What if I buy and the market keeps going down? What if I don't time it right? What if I pay too much? That fear seems to stop most buyers in their tracks, and then all of a sudden, they're immobilized. When really, when they should have been afraid of paying too much, they weren't. And now that they shouldn't be afraid of paying too much, they are. It's quite the paradox, actually. Now let's look at this in a little bit more depth. When the market shifts downwards, buyers, they can easily lose sight of the primary reasons driving their home purchase. When I say that, I mean things like people buy for all sorts of different reasons. They want a different neighborhood. They want a better school district for their kids. They want to be closer to work. They want a recreation home to spend their summers. They want a different floor plan, more space, less space, whatever. But instead, right now, they're becoming super hyper focused on price. And that is all they look at, price and price alone. So many homes for sale, so much choices. Prices are trending downwards, so buyers, they sit and they wait. Yet too many potential buyers buy into the biggest myth of a shift. They think that they can time the market. And believing in this myth is a false sense that the buyer has all the time in the world. So let's look at this. There's two types of buyers in regards to timing. There are those who believe they can time the market and buy at the lowest point. And then there are those that believe that the timing will in fact find them. The ones who believe in timing the market believe they can buy low and sell high and time the market perfectly. The ones who think the opposite think that if they could just always stay in the market, the timing will simply find them. Now, history and data actually support the latter, saying that if you're always in the market, actively paying attention to the market, although you may never sell at the highest peak or by the absolute bottom, you can buy well enough and always do great over time. I mean, think about it logically. You can't predictably time the market to be able to buy at the absolute bottom and sell at the absolute top every single time. The buyers who want to time the real estate market, they're waiters. They're just sitting there, they're waiting. They're those who wait for the prices to come down and down and down. And if the market has dropped, then prices are down, but waiters will wonder if they're as low as they'll go. Oh, they might be lower next week. They might be lower next month. The problem is that nobody really knows this until the prices are headed back up. Let's look at this. So here's prices. Here's prices in a shifting market. Down, 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 down. When do the prices go up? Oh, now, okay. We didn't know that the prices were going to stop going down until they're already coming up again. Okay, what about the peak? What about the peak? Prices are going up, prices are going up, prices are going up, prices are going, oh, now they're going down. Here was the absolute bottom, here was the absolute peak, but we didn't realize it until here or here. You never know that you've hit the bottom of the market until it's too late. Prices have already gone up and you've missed your advantage. The advantage actually is here. No one can perfectly time the market. Perfect timing is luck. Sure, I mean, we can look at the indicators that'll point out the direction the market is going, and we can absolutely mark how far it's fallen or risen. But after that, the only way to know that our market has bottomed or peaked out is after it has. The most savvy investors buy and sell in the safe zone. This is the area of certainty. You see, this is what markets do. Markets, they go up, they come down, they go up, they come down, they go up, they come down. That's just the way it goes. So when you look at this area of certainty, this is the area of certainty here. The waiters, they're trying to buy here and here. They're outside of that area of certainty. No, you may not be selling right at the peak high or buying at the peak low when you're dealing in this safe zone. However, you're living in the area of certainty. These savvy real estate investors, they're not unrealistic and they're not greedy. They know that they can't predict the exact date of the peak. They know they can't predict the exact date of the low, but they can see when the market has fallen considerably. They focus on what they can count on. Right in here. They're just trying to buy smart. They aren't looking for a killing because they know that's a matter of luck, not a matter of planning. They know they could just as easily miss the peak or the low as hit it. They instead ask themselves, has the market dropped enough to make a sensible purchase? More often than not, when they're asking this question of themselves, they're already in the safe zone. And the answer is yes. So the answer to the question of how to time the real estate market, either here in the North Okanagan Shuswap or anywhere, is you have to be lucky. Because by the time you realize it's the bottom, it's too late. The smart money people buy in the safe zone. Sorry, but that's the reality of real estate. I hope that helps dispel the myth of timing the market.